Our brains are wired with blind spots that make us terrible with money. The banking system is engineered to exploit every single one of them. But if you understand how these psychological traps work, you can flip the script. You can weaponize your own cognitive glitches to systematically wipe out your interest payments. The first major glitch is a concept behavioral economists call mental accounting. It is our tendency to value dollars differently depending on where they came from, rather than treating them all as having the exact same value. Look at how we process a $2,000 tax refund compared to a $2,000 paycheck. Even though they are the exact same amount, we divert the refund into a mental bucket for vacation, while the paycheck gets locked away for rent and bills. This irrational sorting is an invisible trap. It prevents us from taking sudden influxes of cash, like a bonus or a tax refund, and applying them directly to our most expensive, high-interest debt. A famous study of New York City taxi drivers from the 1990s shows just how powerful these arbitrary mental targets are. The researchers found that drivers would set a daily income goal. On highly lucrative rainy days, they would hit that target quickly and then just go home. Instead of working longer when their hourly rate was at its highest, they acted entirely against mathematical logic to satisfy a mental checklist. Credit card companies exploit this target-setting glitch using the minimum payment prompt. It acts as a powerful psychological anchor. Giving you an easily achievable target creates a false sense of safety, granting permission to prioritize discretionary spending past that massive underlying balance. This mandatory minimum functions as a predatory psychological trap designed to maximize the bank's long-term interest profits. Look at how we used to buy things. To understand modern debt, you have to understand a neurological concept called the pain of paying. Physically handing over paper money required effort. It triggered genuine neurological friction and a visceral sense of loss. That discomfort acted as a natural biological brake on our spending. Today's frictionless digital wallets act as digital anesthesia. They completely remove that physical friction, allowing money to leave our accounts without registering as a loss. This seamless spending environment exposes another deep psychological driver of modern debt, known as hyperbolic discounting. Our primal brains heavily overvalue the immediate dopamine hit of a purchase today. At the exact same time, we entirely dismiss the abstract future pain of paying off the debt tomorrow. We trick ourselves into believing our future self will somehow be more disciplined. This curve shows the danger of that biological blind spot. Tiny, invisible subscriptions bypass our threat detection completely. They quietly stack up, month after month, until they multiply into a devastating 22% annual compound interest trap. Because human cognition runs on a flawed financial autopilot, relying on sheer willpower is a losing game. To survive, you have to consciously reprogram your environment. Hack number 1 is automating micropayments to exploit your own loss aversion. You can set up what behavioral economists call a hard commitment device. This means structuring automatic transfers to pay down debt the moment your paycheck lands, before you see the money. If you never see it, you prevent the psychological pain of giving it up. Hack number 2 is reframing the APR. The clinical term interest is boring, and it completely fails to trigger our brain's natural danger signals. Look at this budget line item. By relabeling your interest charges as a tax or a fee, you trigger a visceral, biological aversion to being exploited by large institutions. Shifting your perception of interest into this loss frame turns passive financial acceptance into aggressive, visceral motivation to destroy the debt. Which brings us to the final hack, the dopamine snowball, traditionally known as the debt snowball method. This sequence shows how you hack your brain's reward loops. Instead of targeting the highest interest rate first, you pay off the smallest balances early. This provides an immediate dopamine rush, building the sustained momentum needed to tackle massive, high-interest balances later. Inject friction back into your financial life. Delete your one-click shopping apps, automate your debt payments, and ignore the bank's minimum payment anchor. Open your banking app today and set up an automatic daily microtransfer toward your principal. And make sure to subscribe to this channel so you can keep outsmarting the algorithms designed to drain your wealth. Willpower is a myth. Mastering your own financial psychology through structural friction is the only true path to keeping your money.